Hey everyone, this is Jason Maggard here from Modern Money Method. Thanks for stopping in. I'm going to kind of make a short monthly update here. This is the January statistics for the Northwest Multiple Listing Service. And I'm not going to read the information that they wrote here. It's something that you can go check on yourself. It's free to everyone. You can just go to this website, nwmls.com, and go to the monthly newsletter. Monthly Market Snapshot is what it's called now, and came out February 6th with the December data. Now, I do want to point out a couple things that have kind of affected what I'm going to keep reporting going forward. One of them is, in the past, solds in comparison to pendings have always run at about 85%, meaning 15% of pending transactions fall out. And there's a multitude of reasons that can happen, but basically 85% of them come to fruition and end up being closed sales. So the numbers that the Northwest Multiple Listing Service has been publishing for years is the pendings in this snapshot. So I've been tracking those. And what I want to let you know is those are becoming a little bit less accurate. And here's proof of it right here. Northwest Multiple Listing Service showed that there was 5,776 accepted offers, down about 9%. But when you get down here, January's completed transactions were 3,264, which was down something like 30%. And that's due to the fact that about 30% to 35% of pendings now are falling out. And that is due to a multitude of reasons as well. So I don't want to go into that, but the ratio has become more out of whack, meaning pendings are not as accurate of a barometer as they have been in the past. Because let's say someone writes up a house and it falls out due to inspection, due to whatever, and then they write up another house. Well, that person has created two pendings. And in the past, that person may have only created one pending. So you can create the appearance of excess demand if you have a lot of fallout, because those people are generally interested in buying a house and they're going to keep coming back until they do close on a transaction. So I think we're going to see the results of that a little bit later here in the year, as sales are not as robust as people think they're going to be, because people in the industry now are like, okay, sweet, no longer 40% year over year declines, 10%, maybe even on par. But anyway, so this has the summary here. New listings are still hard to come by, and that's because a lot of people have 3% interest rates and mortgage payments that are dramatically low in relation to the value of their property. So it's difficult to want to move, even if you would like to. Let's say you have a job opportunity, a couple hundred miles away that pays $20,000 more a year. Well, if your house payment is going to go up by $1,000 to $1,500 a month, that pay raise has completely evaporated. I do have one other thing that I kind of disagree with here on them, is everybody got excited that in January, interest rates did come down from the November high. For about a week, we were in the 7.25% range on mortgages, and they were above 7 for 2-3 weeks in November. And there's been a steady decline all the way till the very end of January, where they went down to about 5.9%. And they discussed that here in this article. As you guys know, back when rates were only 4.5%, spring of 2022, I was predicting 7% plus mortgage rates. I still am. It's a process for them to get there. They've gone a lot faster than I thought. They went there, they pulled back, but I think we're going there again. And so where I kind of disagree with them is they talk about sales prices and that things are down just a little bit year over year. I think we're going to start seeing them down more year over year here in a few months. But they talk about new normal for mortgage rates being 5.5% to 6.5% range. Well, maybe down the road, but I mean, in the last 5 months, 5 months, we've only been below 6% for maybe a week or two. So to think we're going to get to 5.5 or something is crazy. I think 6.5 to 7.5 is the real norm. So anyway, what I want to hop down here to is the important numbers. We have the median closed sales prices here. They're still declining in general. Pierce County did jump up, even though the other top 7 all went down. Months of inventory is well over 2% everywhere except Snohomish County. Look at these crazy jumps. We went from 1 to 2 weeks of inventory a year ago to now 2 months of inventory. A lot of people don't believe that that is a normal market now. They think 6 months is. I don't believe that. I think going forward that a new normal is going to be 2 to 4 months of inventory. And that's just due to the fact that people are not going to sell houses when you have $1,000, $1,500 house payments on $500,000 houses. You're going to rent it to a friend. You're going to stay put. So inventory is going to be what was formerly considered tight for many years. But we have house prices going down with this low inventory. So you can't really say it's still a seller's market. And here's where I want to show you. This is the counties, new listings, pending, and closed. See how this ratio has become just crazy. We have 1,800 pending sales and only 1,000 closed. Look at Pierce County. Total active listings are 1,210. Compared to pendings, almost everything's going pending, like 90%. But closings, you're only talking, it's barely half. So a lot of inventory is tied up in this pending status, making inventory look a little bit tighter than I think it necessarily needed to be. So the data to take from here, I was wrong. I will admit it. I called for us dropping below 3,000 here in December for the 4 county pendings, which was a pretty bold call because we've only been below it 3 other times. This is starting to really look like 2007, 2008. We dipped down. Look at this. We bounced back to 4,100. I thought we may be under 3,000 again. Now, the actual closings were well under 3,000. So here you have the old pending lows from 08 and 09. So when these show 3,300 pending, about 3,000 to 2,900 closed. So that's what I'm talking about is, so we show 4,100 pending, but about 3,000 closed. So looks like we have hit the low for pendings. It is hard to keep it down in the springtime. People just like to buy houses and go house looking. So we're going to see these same trends from 08, 09. I believe we're going to be under year over year again for the 3rd year on transactions, but they will trend up. Now, if we have anything in this March, April, May period that is under 6,000 for pendings, in my opinion, that foretells us that we are going to have more pricing pressure on the houses come late summer and fall of 2023 here. Let's hop over to my median price chart. Wow, folks, this is insane. So in January, the median house price for King County was $723,000. For Snohomish, it was $645,000. For Pierce, it was $510,000. Pierce actually jumped up. I think a lot of that is due to new construction down here. The houses are about 500 square feet bigger than they were just a few years ago. And a lot of these national builders are building a lot of homes in the $600,000 to $700,000 range. Now, they were doing $50,000 to $100,000 price reductions, but I think that those made up a large percentage of the volume. So look at this here in King County. The last time we were this low was January of 2022. And here's where it gets really crazy. If you go back to March of 2021, So 22 months ago, the average median price in King County is down over the last 22 months. That's just amazing to think about. Snohomish, we're at 645. We peaked out at 800. So that is nearly a 20% decline for Snohomish County. And similarly, you have to go back to April of 2021, not 2022, to see these prices. Now, Pierce County is at 510, so it's well above 2021 prices. But as you can kind of see, Pierce County ran up to 500,000 in the spring of 2021, had a difficult time creeping higher. This last spring, April, May of 2022, we hit a peak of 575, and now we're back into the low 500s. So everybody who was very stressed out and felt like they were missing out, that house prices were all going to go to $1 million, which a lot of them have, you didn't miss out. We've had quite a pullback here, anywhere from 12 to nearly 20% in a lot of areas, just in the past 10 months. So this chart I plan on keeping. They don't show this data anymore, so this is my own personal data. I have a few more data points that I don't have on here, but I have the July of 2007, and then started in December of 2020 when rates were below 3%. Big question, will we get back to these prices? Boy, we still have a long ways to go. They would have to drop. King County would only have to drop another 10%, but Snohomish and Pierce would have to drop another 15 to 16%. Boy, we could see that. Wow, what if in the fall, winter of 2023, so that'd be 3 years from this point right here, we're back to these prices? I would give that a 50-50 chance. And that would be pretty shocking to a lot of people. That would mean 3 years of price gains have been washed out. Of course, the payments are still dramatically higher because all of 2021, you were getting these 3% mortgages, and rates will be in the 6s and 7s, hopefully not the 8s. So, all right, guys, that's what I wanted to share with you today. Thanks for coming in. I will see you soon.